The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Great to have you with us this evening. And hello and greetings also to our friends in Australia and New Zealand and elsewhere. Hello, Norbert. Good to have you with us. Hay fever season is past. I hope it is, mate. With me, it's never really passed, I'm afraid. How's the sound, guys? Would somebody just please go and type in the question box, tell me how the sound is. Are you hearing me all right? Yeah, thanks. Oh, Keith, yeah, Keith's the tutorial guy in the middle of it. Thank you, Keith. Great. Norbert, if he can get it up where he lives, you can all get it. So, folks, terrific day down here. I can tell you the sun's shining. We seem to have gone from, well, this is supposed to be spring, but boy, it's a beautiful spring day. It's nearly a summer day. The weather's just turned the last 2 or 3 days. Beautiful, brilliant sunshine. Short sleeve weather to any of you living in that cold country. And the sky is beautifully blue, and so is the Pacific Ocean. It's all looking quite wonderful. So today we're going to talk about trading, conspiracy theories, and Occam's razor. So I'm so glad you could be with us. Okay, let's make a start. Here we are. Excellent. Excellent. Now, who have we got? Oh, Adrian's with us. Adrian, I've got your analysis of the Hang Seng, which you asked for. It's at the end of the webinar, so don't leave early. Albert's tutorial guy, great to have you with us. Bernard, haven't heard from you for, well, a very, very long time. I hope you're very well, my friend. It's great to have you with us. Carol, special welcome to ladies. We love to have ladies with us. We don't have many. Chase is here. I'm still not smoking. Chase, make you happy. Thanks for your prompting constantly. Ewell, he's a tutorial guy. Ewell, lovely to hear from you. Great to have you with us here. And Jeff, I'm going to talk about Jeff today, Mr. Fine Arts. He'll know who I'm talking about. We had a great session for 2 hours yesterday. He's just wrapping up his tutorials, doing very, very well. And good to have you here. Justin, down in the Hunter Valley. Keith, of course. Murph, my constant companion. Great to have you with us. Milton, you too. Norbert, of course, a tutorial guy. Lovely, lovely guy. Peter, Peter is a short-term trading guru that we talk occasionally. Good to have you with us again, Peter. Up in Warwick, I think, if I remember. Sue, one of our star lady traders up in Cairns. Great to have you with us, Sue. And Tom, of course, the wealth fund manager from Florida. Hope it didn't get too soggy down there for you, Tom, and Trevor. Grand to have all of you with us, folks. Anyway, let's move on. All of you do or should know about the Daniel Code. If not, it's all there on the website for you. So, Occam's razor. What a mouthful, isn't it? Took me many years actually to be inquisitive enough to go and find out what Occam's razor was, and it's basically a philosophical concept, and it basically states that the more variables in a proposition, the less accurate the solution will be. Which, interestingly enough, is one of the big problems that many people have with trading. You'll see guys who have their charts absolutely flooded with indicators, and they finish up getting paralysis of analysis. There's just too much input, and most traders need to use the Occam's razor solution as well. But it came to mind. It's what it says is the correct solution to any unknown is likely to be the most simple, or the solution with the most direct linkage. And this has often been summarized as, when you hear hoofbeats, think horses, not zebras. And it came to mind for me because this week I watched a movie called Shock and Awe. And it's not a particularly good movie, but it's very interesting because it's the story of a couple of journalists who worked for Knight Ridder, who are a big news congregating gathers of news in the United States, a bit like AP. After 9/11, these guys got onto the idea very quickly that this was probably bin Laden as the man behind it. And at that same time, the Bush administration, this is George W. Bush, they were starting to push the Iraq issue. The Knight Ridder guys were saying, they were writing articles and pushing the idea that this there was linkage to Saudi Arabia, and which of course there was. 18 of the 20 hijackers were Saudi citizens. At the same time, the administration was pushing the issue that it was some linkage to Iraq, I should say, which gave them the excuse to go and eventually topple Saddam Hussein, which, toppling dictators hasn't been a great concept. Dictators generally have their things pretty well under control. Gaddafi was a good example, and Hussein was probably a better example. This Iraq, at least, is pretty much part of the epicenter of the Shia-Sunni conflicts that have been going on endlessly in the Muslim world. It's a predominantly Shia country, but Hussein formed his Ba'ath Party based on the Sunnis. So Saddam Hussein himself was a Sunni Muslim, and the Ba'ath Party was based on the Sunnis. So you had this unusual situation that the minority group essentially were the controlling interest. But there's no doubt that there were some benefits to Saddam Hussein's reign. I met a woman in Australia who'd been living in Baghdad at the time, and she told me she had two daughters who were very keen dancers, and they had a ballet school about a block and a half away, and she said she had these young girls, I think they were 7, 8, 9, that sort of age, and she was more than happy for them to walk to and from their ballet classes in Baghdad unescorted. This is one Hussein was running the joint. It was apparently very much a place of law and order, and she went on to add, I wouldn't dream of doing that in Melbourne, Australia. Well, that gives you some comparison. The problem with deposing dictators is you've got to have something credible to replace them with. The whole Iraq debacle, the people that the Bush administration thought were going to be suitable to replace them with were absolutely, totally hopeless. And things just go on and on and on. But anyway, the whole of this shock and awe was sort of based on the idea that there was a giant conspiracy going on, but the conspiracy was at the government level. If any of you have seen Michael Moore's documentaries, Fahrenheit 9/11, and I think there were some follow-ups as well, quite extraordinary when you see these floors, explosive charges going off as the building drops. It's certainly enough to give you some pause for thought, and if you're not a conspiracy theorist, you probably will be after you've seen a bit of Michael Moore's work. But the whole point of that was that Occam's razor and the logic of a straight line connection is so blatantly in favor of Obama. I've labelled him Bin Laden, I should say. Osama Bin Laden. He was a known terrorist and a Saudi citizen, and of course 18 of these 20 hijackers were Saudis. So how then does the Bush administration link this to Saddam Hussein in Iraq and start beating the drum for military action there? I don't know that anyone's ever properly answered that question, but it's certainly there. And Of course, conspiracy theories apply also to traders, and a lot of them, in my view, are true. This is a fairly benign one. This is the chart of platinum, and that's 30th of August, that huge bar. And you can see the market had been consolidating for a number of days. The trend was clearly up, had been for weeks, but you've had this big consolidation, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars, and all of a sudden an article came out in all places in AAP Reuters, which doesn't usually carry this sort of material, and it was a article the day before on platinum, saying that because of the usage of platinum in the manufacture of motor vehicles, particularly in its exhaust and emission system, the price of it was going to go up. Well, logic told you that wasn't true, because the vehicle manufacturing figures year to date are looking quite dismal across quite a range of vehicles. And of course, the reason there's an uptrend was just being solidified by the big push up in precious metals, gold and silver. But nonetheless, that little story with no apparent sourcing turned in a nearly $7,000 bar. So my view is always buy the rumor, sell the deed. You can see it went for another day and then had a little minor reversal. The trend is still up, and it's the dominant trend. It'll keep going. Let's talk a bit about trading, which is our business. And in my view, I talk too much about other things. The business of trading is not to be right. The business of trading is to make money. Now, saying the business of trading is not to be right may be, or at least appear to be, a contradiction. I use that in the sense that people always want to know the future. I'm often asked, as I'm asked today by Adrian down in Adelaide, what's the Hang Seng going to do? I've got an answer for you, and the rest of you might be interested as well, but that's not the business. The business of trading is to make money, and we measure our success as traders by how much money we're making. In my opinion, you can't win at the trading game without a system. I've been in the futures business now, either personally as a trader or as a teacher, for 30 years. There's some basis for me telling you that you can't win without a system. Emotion, hope and fear will drive you in different directions, and you'll just be torn to pieces one way or the other. You have to be systematic. You have to have a system, a proven system that you prove for yourself works, and then you stick to that like glue. Jeff, who's with us today, Mr. Fine Arts, I talked to him he's a Daniel Code tutorial client who started probably a year ago or so now, Jeff, I guess. But anyway, he's finishing off his tutorial, working hard on sim trading, electronic trading. He's saying, he told me that his winners are more than twice the size of his losers. And he has a better than 60% win rate. Now, think about that, because it's quite extraordinary. If you've got a system where the winners are more than twice the size of the losers, 60% takes you through, the 60% win rate takes you through the moon. That's pretty high, and that's very high, in fact, because Jeff's done a Daniel Code tutorial, knows what he's doing, and is a pretty serious, dedicated man. But you think about that, if you've got twice the win rate twice the profit on your wins to your losses, you don't really need a big win rate. We generally have a win rate around 50 to 55%, even sometimes a bit under 50. But those systems, anywhere around there, make an awful lot of money because the average win is so much bigger than the average loss. In fact, you think about it, you actually only need a 33% win rate to break even if your wins are twice your losses. So Daniel code systems run plus or minus around 50–55%, and if you do a tutorial, you can do a whole lot better than that, as Jeff is doing now. So, Jeff, congratulations on your achievements to date, and you're about to make the big step of putting down the real money. And just treat it as another day. Have that routine right, have your system right, have the brain completely clear. I said to Jeff yesterday, if you've got some problems in the family or problems at work, if you're a bit irritated or out of sorts, stop trading. It's terribly, terribly easy for the chemistry in your brain to just change a little bit subtly. I know with my experience, because I've excuse me, because I've got two children and a number of people that I do business with, it's not totally unheard of for me to get a bit cranky. I must say, I've mellowed with old age. I used to be quite a firecracker, had a typically bad Irish temper. But when I get cranky, I notice with my trading I get too aggressive. And what's happened is that your brain set to trade the way you should be, the chemicals in your brain need to just be in that balance where you're just in the zone. You're focused on doing your analysis for the day, and that's all. Now, with the Daniel code, because we trade daily bars, do your analysis in the evening as soon as you get your data, or in the morning in the Southern Hemisphere. You only need to have that perfect concentration for that period of time, and it's not long. I mean, I do my signals in probably 20 minutes. Most of you could do them all within an hour, and that's it. You can go off for the rest of the day. You can go and play golf, or go for a swim, or go and get an ice cream, as Henry Cecil, the great trainer of the mighty Frankel, used to say. God bless him. And just don't be trading if you're mentally not just balanced and where you want to be. So, Jeff, locking out the world for that period of time that you're doing your analysis is vital. Okay, so we don't really talk about our trading enough, and that's my fault, I guess, but I'm going to burden you with some of it today. We had yeah, Norbert, I sort of agree with you. Mood and being in a rush are not good for successful trades. No, it's hopeless, isn't it, Norbert? You've got to have that balance. The Japanese call it wa. It's like peace. It's being in a state like very smooth water in a pond. Anyway, I'm going to show you some of our trades this week, because we had a pretty sensational day on Wednesday. In terms of, I put a post up on the website if you haven't seen it. We had 1, 2, 3, 4, 5, 6, 7 futures trades. 1, 2, 3, 4, 5, 6 of them were elected. That is, they went to the number that we specify in the trades that they have to go to become active. 6 of them were elected. All were profitable. In futures, we had 1, 2, 3, 4, 5, 6. We also had 7 signals for the day. 6 of them were elected, and all were profitable. And the 7th got elected the next day and is profitable now. So, as I put in the post, most of our days are great. Occasionally, they're not so great. Tuesday was a pretty shoddy day. Why? Well, you'd had the holiday, you'd had the Labor Day weekend. Monday charts had price levels on them. Even though the markets were closed, the electronic system traded until the middle of the morning, the early morning before the start. And there were bars on these charts, and they're quite misleading because there's very few people trading. The arbitrageurs aren't active. Markets can pretty well do what they do, but trading after a public holiday and relying on the data from that public holiday, it's pretty fraught, which is why we say for the TO3 and plus signals of the Daniel code that after a market holiday we require a full day of normal trading to reset the charts, which is what we eventually had on Tuesday. So the Wednesday signals were pretty fantastic. We don't talk much either about Forex, and we should, because a good proportion of our clients are Forex traders, and very good at it too. And you can see these are the signals I'm showing you were from, they were posted Tuesday night after the market closed for action on Wednesday. This is Canadian dollar, Japanese yen. Nice trade straight up. This is the euro against the Japanese yen. You can see what set this off. You can see the blue line. Perhaps I should go back one because I hadn't made the point to you that what triggered this system, it's not the stochastic. You can see that almost all of these signals are generated by price. So you can see the down bar on Tuesday, and you can see the red line at 79,215, which is a Daniel code retracement level. Now, these are not Fibonacci levels. They're nothing you know of unless you've learnt them at the Daniel code, but they are deadly accurate, and I can prove to you, at least to my satisfaction, seeing as we've been in this business a long time, and the website, in fact, has been public now for 11 years. You know, are we that old, you say? Well, 2008 we started this website, so I guess we're getting on for 12 years soon. Anyway, these Daniel code levels are quite unique to the Daniel code. They're not based on anything in trading you've ever heard of if you're not a Daniel code member, but you will see how incredibly accurate they are. So it was that support, 79,215, along with some other issues that are not on this chart that are required to create the TO3 and plus signals, both of which have some proportion of time embedded in the creation of the signal. So you can see that was a super trade. Very nice, still going. Here's the next one, Euro JPY. This is a slightly different one. This is a blue line trade. You can see we had a Daniel code blue line. They're on the charts, folks. Remind me to show you, for those of you that are not familiar with us, we post these charts twice a week. On Sunday evening and on Wednesday evening US time, and they've got all these Daniel code price levels on them. So we had a blue line there at 116,220. You can see that the low on Tuesday, the close was almost exactly to the tick at 116,220. These markets will always find, well, if they're going to make a turn, they'll certainly find the Daniel code price level plus or minus 0.1% or less. It's very, very accurate. And that together with the other requirements set off a blue line and a TO3 buy, even though there was a strong downtrend in force. And you can see it's made $1,400 in 2 days. This is the Euro US dollar. This is a different signal. This is a plus buy signal. We classify these signals slightly differently. In this case, you can see that the setup bar on Tuesday is already a key reversal bar. So key reversal bar is a bar, the buying key reversal bar, which this was, is a bar that opens within the range of the previous bar, makes a new low for the move, then reverses and closes above its own open and above the previous day's close. That's called a key reversal bar. The same thing applies the other way. A selling key reversal bar would be a bar that opens within the range of the previous bar, makes a new high for the move, then reverses and closes below its own open and below the previous day's close. In addition to that, you can have some bars that don't exactly meet that definition. They sometimes will open not within the range, but if they've got the other characteristics, they will act as in a similar way as we would expect a key reversal bar to act. Now, the beauty of key reversal bars is generally with the trend. They're a wonderful continuation signal for re-entering with the trend. This is not that. This is a reversal signal that comes from our plus suite of signals, and it requires some different things, including a element of time. This is all in the same day. This stuff, folks. This is British pound, Swiss franc. Same thing. This was a TO3 buy at support, black line support 1.1849. Or market went there almost exactly and ran away from it in a hurry. Bye $2,000 in a couple of days. GBP-JPY. This was a TO3 signal and a time signal. You can see with the black line, it hit the black line and then a blue line under it and reversed. The black lines are different to all of the other Daniel Code support and resistance lines because they work not only on the daily bar high-low, but also on the close. This bar running down, busting through the black line and then having hysterics to get away from it and turn around and go back up is a dead giveaway for a possible, or I should say, probable trend change. And that trade made $3,500 into today's close. This is the dollar Canadian. Bear with me for a second. I'm distracted because I've not put on here for you the most important trade, which I will, because I know you very keen gold and silver guys. I'll show you that as we go along. This is dollar CAD. This is the same thing. The Daniel Code blue line on the Tuesday, the high of that bar, very, very near the 1.3360 blue line. And that, together with the other requirements for setting up a TO3 signal, including an element of time, set up the sell for the next day, and down it's gone one day and a bit more. Moving now on to futures. This was crude oil. We had a TO3 buy for this on Wednesday, which was elected. It's made almost $1,300. And you can see why this was triggered. It hit that blue line at 52.87 and said, I'm off. And offered to go making new highs. This is the US dollar index, the same sort of thing. It hit the blue line, 99.305. It looks like the bar's gone a little bit through it, but it was fairly small. And in addition, there was a time element sell on that bar, which is why the US dollar index reversed. This is the S&P EMini. This is interesting. We had, no, it's the Russell that's going to be most interesting. We had buy signals for this on Wednesday. You either got in at the top of the red bar, which is an inside bar if you're a tutorial guy or gal. If not, you probably got in at the high of the previous bar that it was not itself an inside bar. Either way, a couple of days trading and you've got a $2,000 return in there. Copper, this was a very, very good trade, you can see. The low, I'll actually bring up this chart to give you an indication of how accurate these are. You can see there's a blue line there at 248, and the low on Tuesday was 248.20. 248.20 now. This thing works in half, so that's 4 ticks. That's how accurate this stuff is. Quite extraordinary, isn't it? That, together with the other requirements, gave us a TO3 buy signal that put $2,500 into your account pretty swiftly. Coffee, this is interesting. We had a buy signal which was elected on Thursday. It only made something less than $20. And I actually put a post on forum and at the front page, those of you who follow us, to say that the trade was elected, made a few bucks profit, but there was no change of trend. So if you read that, you're probably aware that that meant if there's no change of trend, the highest probability means the old trend continues, and the old trend there was down. I'm not at all convinced how far down this is going to go. It's really part of a big consolidation that's been going on for 10 or for a couple of weeks at least. Watch that. Russell, this is the interesting one, folks. I'm sure most of you got this. I'll just bring up the chart on the other screen here. So here was the buy signal. Tuesday's high was 1489.3. You can see there are two blue lines on this chart. These are not our Daniel code blue lines. I've just put these on to show you what I'm talking about. That high of the setup bar was 1489.3. Now, we have a protocol that on futures we have a 2-tick buffer. So if we're buying a bar that's topped at 1489.3, we're a buyer at 1489.5. And what this market did on the Wednesday, it had a high of 48.9.4. In other words, the trade was theoretically elected because it traded above the true high. Remember, very important to distinguish between true highs, true lows, and chart highs. Chart lows, they're not the same thing. So vitally important that you understand that. Didn't apply in this case, but just bear that in mind. So the trade was technically elected, but we didn't get filled because of this buffer of 2 ticks that I use, because I've seen so many trades where the trade gets elected by 1 tick and it's no good. So I introduced that rule, many years ago, that we use a 2-tick buffer. In Forex, incidentally, we have to use a 5-tick buffer. The reason for that is that Forex doesn't come from a central exchange. The prices are created by the banking group providing the liquidity to each individual platform, and you can have different highs and lows when you look at the chart, depending which platform you're getting your data from. And that's totally unlike futures, where all of the data is generated by the same exchange. So with futures, you only need a 2-tick buffer. Forex, you need a 5-tick buffer because there can be some vagaries in the price, the true high, true low. The only valid support or resistance you'll ever find on a chart are Daniel code price levels and true highs and true lows. So at any rate, we had this down as a buy it was actually a TO3 buy for Wednesday. And it just didn't get there. But our trades, here we are valid for 2 days. So as it was not elected, you got elected the next day today. And had a pretty weak close, didn't it? It wasn't too excited about anything. But it was an easy $900 nonetheless. Okay, so let's move on and talk about the conspiracy of the elites. Now, I really hate that word elites. The media insists on defining or referring to leaders of political parties as elites. I just want to talk about the absolute danger of these people, and it just seems to be proven all over the world. It's been proven in America and Australia, and now being proved in real life, in real time, in the UK, which is having an awful argument over the BREXIT issue. So those of you in the States might wonder why I'm interested in British politics. My father was a Royal Naval officer, British Navy, and of course he was an Englishman down to his bootstraps. We actually came to Australia when I was 6 years old, so I've had the inestimable privilege of being raised as an Australian. But when I was a practicing attorney back in the day, the highest court of appeal from the Australian High Court was the Privy Council in London, which is the highest court in the land. And I used to go off I was pretty lucky. The firm I was with, I used to go to England, I won't say every year, but pretty close to every year, to handle matters that were on appeal from the Australian High Court or Supreme Court to the Privy Council. So I spent quite a lot of time in England. The best way, being a lawyer, you're doing it at someone else's expense, staying in very, very good hotels, and getting paid for the privilege. So I've met a lot of people. I know a lot of people there, and I'm interested in what happens in the British parliamentary system. But let's just start with the US system. Now, it doesn't matter what you think of Trump, plus or minus. The reality is that for all presidents, their opportunity to do something big usually comes early in their first term, and that's because the midterms so often will lead to a split in control between the Senate and the House of Representatives and Congress, and that's exactly what happened to Trump. And Paul Ryan, who was then the leader of the House for the Republicans, was never on board with Trump. He was very offended by the statements that Trump made that were highlighted in the election campaign. We have ladies with us today, thank goodness, love having them, so I won't repeat them. But they were pretty objectionable in most circumstances. And Ryan was shocked by that and said he wasn't going to support Trump, he wasn't going to endorse him. And he certainly played pretty dead during the Trump presidency. He was the one who he wouldn't put up the legislation to get the border funding that Trump was after. And he convinced Trump that, as he said, wait till after the midterms, we'll get you the money. Well, we know what happened in the midterms. They lost control. The Republicans lost control of the House. Mitch McConnell was part of that. He's much more subtle, of course, than Paul Ryan, much even more reserved. He just sat very quietly and really did nothing to stick his neck out for Trump, and he took the playing the long game. He took the view the most important that he could do was get as many Republican appointed judges elected and appointed as he could, and he's done a terrific job on that. That's going to be a huge long-term effect of the Trump presidency, regardless of how long it lasts. And then we had the extraordinary situation of McCain, John McCain, who became an implacable enemy of Trump. John McCain, I think, was a very decent man. He had some amazing war service where he was captured over Vietnam and kept as a captive in dreadful conditions, quite horrible if you read his story. And he survived all that, and in a most honourable way. He was offered early release because he was the son of a well-known US admiral. In fact, he was also the grandson of another well-known US admiral, a pretty elite guy. And he was a naval aviator, McCain, and Trump offended him, which I can understand during his election campaign. He had a crack at McCain saying, I don't honour his war service, I honour people who don't get captured instead of people who do, which is a really, really stupid thing to say. But McCain took that and other statements. It became an implacable enemy of Trump. And when the Republicans had a chance to repeal Obamacare, it came down to one vote. And McCain voted against it. He shafted the whole of that Republican initiative just on that one vote. It finished up as circumstances were that he had the final vote, and he voted against the Republicans and with the Democrats. In Australia, we've seen the same thing. We somehow or other, God knows how, well, we do know how, I shouldn't say God knows how, the media knows how, we got a Prime Minister called Malcolm Turnbull, who's an ex-Goldman Sachs chairman. That'll probably tell you all you need to know about him, but the media fell totally in love with this guy. He's a bit of a lefty, how do they call them, cappuccino swilling wearer of leather jackets. Not sure that's actually the case. I've got a couple of leather jackets myself. excuse me, but the story of Turnbull, who I've known for many years, he actually, when he wanted to start a political career, he went to see the state leader of the Australian Labor Party. So Australian politics is basically split between our two dominant parties, the National Liberal, the Liberal National Party coalition, which is like your Republicans, and it's a coalition between the Liberal or Tory party, if you like, and the Australian National Party, which used to be the Country Party. It's a party that's got policies. It's run by farmers for the benefit of farmers, and their candidates stand in the rural seats, do very well. Turnbull went and applied to become a Labor, asked to be appointed as a Labor senator, that being equivalent to your Democrats. And the Graham Richardson, old Richo, a pretty smart guy, turned him down. So the next thing we know of Turnbull, he's joined the Liberal Party, and he's standing for the safe seat of Wentworth. Well, he goes on to become the Prime Minister in pretty ordinary circumstances. But rather than use the word elites, I would rather say about all of these people, they're false conservatives. They stand as conservatives. They present themselves as conservatives. They're not really conservatives. And Turnbull's main acolyte was a dreadful, dreadful woman called Julie Bishop, who now thankfully has left the Parliament. We'll hopefully seen the last of her, who over the many years I observed her, I think she did nothing more than be a fashion plate, get a picture in the paper, having nice drinks of champagne and attending any function she could, and of course being the Minister for Foreign Affairs. I don't think she had a foreign affair. That's probably not her case, but she was the Minister for Foreign Affairs. She's travelled the world, UN, countries, every conference you could think of, spend money, get a new Chanel outfit, get your picture taken, look cute, that was it. Christopher Pyne, who was the leader of the House, was also a great supporter of Turnbull. So you had this leadership group. Julie Bishop was the Deputy Prime Minister, Christopher Pyne, the leader of the House, and others. You had this leadership group around Turnbull who were anything but conservatives. They were liberals in the American sense of liberals, not in the Australian sense of the Liberal Party. They were in favour of all these green energy initiatives, massive government spending, a massive government intrusion into our lives, which just goes on and on and on, essentially with both parties, in this country at least. But representing themselves as conservative leaders, they were not conservatives. They were false conservatives, like Paul Ryan and Mitch. I won't put McCain in there because I think he just had I think he was a true conservative. He just had a peak of rage and emotion, which can happen. Now in England, you've had this extraordinary situation where David Cameron, who was the Prime Minister, very successful Prime Minister, was eventually impressed to allow the people a vote. It's called a referendum. And you can go, the politicians can ask for a referendum, they can go to the people and give them a vote and be bound by that vote, in theory at least. It doesn't happen very often because politicians hate referendums. Referendums show you the true will of the people. It's the people voting. And despite what your kid may learn in Politics 101, most politicians don't actually consider themselves a servant of the people. They consider themselves well above that level and providers of great knowledge and insight, which in my experience most of them are not. But what happened after Cameron called the referendum, after 30 years of bickering about whether Britain should be in or not in the European Union, is they had a referendum. And the British public voted. They had two choices. You could either vote leave or remain. And the British public voted to leave. And it was about a sort of a 54-48, don't quote me on that sort of figure, but the vote, this is England's a country where elections are optional, as they are in the States, unlike as they are in Australia and New Zealand, where they're compulsory. and 17.5 million people voted on this issue. It was the biggest vote ever in the history of England. Britain, I should say, England, Scotland, Wales and Northern Ireland, biggest vote in Britain. They voted to leave. And since then, it's been endless drama. Cameron resigned after essentially losing the referendum. Him and his government were all pro-EU, pro-Remain, our good friends, the French and the Germans and the rest of the Europeans. He resigned, and it's a tortuous story to get to the end result, but a lady called Theresa May, who had been one of his ministers, she might have been the Minister for Home Affairs, she got elected as Prime Minister. Totally and utterly hopeless. Never, to my knowledge, has achieved anything in her previous parliamentary career, but she was one of the team. She was, a very trusted cabinet member to Cameron, and she got elected Prime Minister, which is elected by the members. It's not like the US presidency. It's not voted for by the people. The elected members, those who are parliamentarians, they vote. They select their own Prime Minister. So she became Prime Minister, a hopeless, utterly hopeless lady who was a Remainer at heart, and stacked a cabinet with all Remainers. And Philip Hammond was the leading light in that. He that became the Chancellor, the Treasurer, called Chancellor in the UK. David Gokey's another one, and others. So she was sitting as Prime Minister, being asked to implement a project with which she totally disagreed, as did all of her cabinet. So at this stage, you sort of got to ask yourself, if the people voted leave, why haven't we left? It's been 3 years. Why has UK not left the European Union? And it's because of this hardcore of hangovers from the Cameron era, who were totally and utterly committed to not leaving the European Union. Well, why is that? They come up with all sorts of arguments that, we never contemplated that leave would mean a complete split with the European Union. We always assumed there'd be a negotiation as good friends, and that we'd still have access to the common market, which is the mercantile part of the European Union, if you like. It's a tax-free, tariff-free area for those within the Union. And of course, you've heard me talk before about regulatory capture. That regulators, and this applies to politicians as well, always finish up getting captured by the people they're supposed to be regulating. In this case, the so-called elites, the leaders of the Tory party, their clients are big banks and big business. Same in Australia, same in US. The right-wing parties are the friends of big banking, big money, big business. And big business in Britain is totally and implacably opposed to leaving the European Union without a deal that guarantees them continued access to the European common market. And that's what this has all been about. And it's an extraordinary situation. Boris Johnson, the new, recently very new Prime Minister of Britain, lost control of the House. He hasn't got the numbers anymore. And of course, in politics, it's a most unforgiving game of numbers. The numbers count for everything. And Johnson couldn't muster the votes he needed in the House. And he's lost 2 or 3 critical votes straight after being appointed. Essentially, the government, or the Prime Minister and his group, no longer control the House of Commons, which is the lower house, the British lower house, the House of Representatives equivalent. They've lost control of it. And these Hammond, Gawkey, the others, in conjunction with the opposition, the Labour Party, now have control of the House. It's a most extraordinary situation. Boris Johnson, the Prime Minister, responded by saying, I'll call an election. But because of the legislation in Britain, the Fixed Elections Act, he can't call an election without a two-third majority of the parliament, and he can't get it. So we're stuck now with a situation with Johnson wanting to try to negotiate a deal with Europe, which appears to me pretty hopeless. They've been trying for 3 years. Europe's just making it as difficult as they can for Britain to make sure that no one else gets the idea that they should try to do this. Excuse me, and and then 31st end of the October, they automatically leave the common market without a deal, and that's what's scaring the pants off big business everywhere, who have no morality, as you know. Seriously never think about the good of the country. Their thoughts go no further than the bottom line of their quarterly P&Ls. John Bercow, the Speaker of the House, who's a very strange character. This is the British House of Commons I'm talking about. He's the Speaker. He has immense power to allow motions to be brought and not brought, make rules saying, well, this has already been discussed, I won't let you raise it again, etc. And to say Bercow's bent over backwards to assist the rebels and to oppose the new Prime Minister is an understatement. But the level of vindictiveness, boy, if you want to see some nasty people at work, watch the Prime Minister's question time in the House of Commons. It's savage, really savage. So the will of the people was leave, as I said, in the largest vote in UK history, Theresa May, who became the Prime Minister. That should be UN UK, not UM. M happens to be just below K on the keyboard, so that's my error. Do forgive me. I'm not a typist. She was a Remainer. Her cabinet were mainly Remainers, and Bercow, the Speaker of the House, worked hard to frustrate any Leave initiative. Looking across the country, Scotland, which has always had difficult relations for most of its history with Britain, with England, voted strongly, very strongly, to remain in the European Union as part of the British vote. Of course, they didn't win that, but the ire, the rage of Scottish parliamentarians, they stand for a party called SNP, the Scottish National Party, the vituperative remark. I mean, it's extraordinary to see. If you want some entertainment, find out when Prime Minister's question time's on, and find a channel, BBC does it, and listen to some of these comments in the House of Commons, particularly something you hear from the SNP. And of course, they've got the problem that it's very difficult to change someone's mind when their livelihood depends on the opposite conditions, you heard me say before. Okay, so we need to just move along with this, because this is Hong Kong. Adrian from Adelaide asked me to have a look at it and tell you what's going to happen. Well, you can see, interestingly, let's start off with the 6-day chart. And you can see that the high, the January high, came right at the 70-day cycle on the Daniel Code time cycle. So that shows you this market's acting just normally, like every other market does, but we haven't covered the Hang Seng, really, and you might want to know if the Daniel Code works on it. Well, it does perfectly. And you can see from the retracements, this is the big lines, that support came in at that red line of 24444. GH, I'm not sure if I have the detail of that, but you can see that support was just about precise, just about perfect, and that's what stopped the run down. So we've had a major bear trend in place. We got a decent rally out of that, and now we're down. We went down, tested a number above those old lows. Let's move now to a daily chart, and you can see this is the daily chart. This is the 057 continuous contract. All those little diamonds at the bottom with an R in them are the rollover dates for the individual futures contracts. And when we go to a daily chart, we can see that the black line, the Daniel code black line is 25165, and the black line in Daniel code parlance is the last level of support or resistance for any swing. Unlike most of the other levels that work on the bar high-low, the black line works on the bar high-low or the close. And you can see here that on this latest rundown, the market's breached that black line but has not closed below it. This, in fact, right here, this is a close-only chart. So you can see the same low there holding just above 25165. And that is an ominous number for you, Adrian. If we get a close below 25165, this market's in serious trouble. So write that down, 25165 on a closing daily bar closing basis. That's the indication that this market is in serious trouble. Good. Okay, mate. Let's see what else we've got. Quite a bit. Before we go on, I do want to tell you, if you are interested in improving your trading, becoming a great trader even, let me know. jneedham@thedanielcode.com. You can undertake a Daniel Code video tutorial where I will teach you everything you need to do exactly the same work that I do all the time. I wanted to insert in here, and I might go and see how I can do this. Perhaps not. I'll finish this and I'll bring a chart up if you don't mind. That's the best way to do this. So let's move on. If you haven't already had a free trial, folks, you're most welcome to. We've got the 6S been running for over a year now, 6S daily signals as well as the TO3 and plus signals I've talked about today. So do go and take a free trial and have a look at everything that's on offer at the Daniel Code. You'll get the daily signals for the blue lines, the TO3, the plus trades, and as well as that we have a totally separate system called 6S that runs only on time, nothing to do with price. It's quite extraordinary how well it does. Here's our compliance statement. Don't leave. We've still got a couple of minutes to go. I want to show you what happened with silver and gold today. This is a compliance statement. Basically, it says you can lose money really quickly trading futures and forex markets, and you can. And I beg and implore you, do not spend real money trading these markets until you have learned how to trade and are confident that you can execute the trades. It's hard to make money and very, very easy to lose it, so be cautious. Okay, let me see if I can now get rid of this and bring up the chart I want to show you. That's gold. We want to go to, that's Seng rather. Let's go to silver. So we had a sell. On Thursday for gold and silver, and we had a blue line trade in silver as well as the TO3. So let's just have a look at those. Gold wasn't too spectacular. Let's spread this out a bit. Let's spread this out a lot. Here we are. Here was your trade. I can tell you, just so you know what triggers this stuff. Here's gold. We had a blue line at 1563.2. Incidentally, folks, let me show you real quickly. If you you can see these are all our future charts and forex charts along here. So you can have a look. These are updated twice a week. You can go and check these. Here's the chart for oil, for gold rather, and you can see we had a blue line at 1563.2, and that's what turns this market down. It just runs through about here. So we had a sell signal underneath that low. and today that's returned you about $1,700. The silver trade was even more interesting. We had a silver SI. We had a blue line at 1971, and I'll put that on the chart for you. $1971, there's your blue line. Now, these Daniel code signals are triggered either at the bar high-low or on the close. The close of this market is 1969. The blue line's at 1971. That's target recognition. And once that happens, it starts to create signals. And this has been a really sweet little trade. This was a TO3 and a blue line trade for today. And there's an easy $2,500 for you folks. I'll just make sure it understands this is going down, not up. There was a really easy $2,600 which just jumped straight into your bag there. So again, let's go to the back to the Daniel Code website. Let's have a look under metals. Here's silver coming up. Almost instantly, you can see yourself, there's that 1971 number that we're talking about there, and that high. Sorry, I'm looking at the wrong chart before. That high was 1975. There actually was another line which I'd taken off because the market had gone through it. That was very, very close to the close, which was 1955. So that set up not only a TO3 signal, but also a blue line trade. They're all there, and there you were. You can add another $2,700 to the pot. So I guess Daniel Code folks have had a wonderful, wonderful week. And I think that brings us to the end, my friends. It's Friday, almost 11:30 in the morning on Friday here. I put my orders on, so I'm finished for the week. And the swimming pool beckons with this beautiful spring weather, which is really pretty close to summer. So lovely to have you with us. Any questions you have, please email me. I'm always delighted to deal with them. Any other markets that we don't generally cover that you are interested in, please by all means email me and let me know. As Adrian did, I'm happy to copy him then. So thanks for being with us, Murph. You especially, my mate. Good, glad you enjoyed it, Jeff. Look forward to talking with you too. Whenever you like, let me know. Pleasure having you, folks, and enjoy today's trading. Tonight's trading. For me, it's tonight. For you, it's tomorrow's trading. It's a bit hard, this being in the other time frame, isn't it? And have a very pleasant weekend. Bye for now.